SDGs, and the finance sector. Why would the finance sector care about sustainability and the Sustainable Development Goals? Simply because it makes business sense. Investors and the financial community put money into business to make a return. And they make a return on businesses that manage and operate well. Well, today, the reality is that if you don't address social issues, if you're not an effective steward of environmental resources, if you're not paying attention to sustainability issues at the same time as and with the same amount of attention as you're paying to other business issues, forget it. You're not going to be in business long and you're not going to do well. You may hit some real short-term profit target, but if you want a sustainable business that's going to go on and succeed, investors know that you need to have a balanced performance. You need to be creating business value in a way that creates social value and environmental stewardship, and that helps them to understand how you're managing risk. Because if you're not managing those issues, you've got a huge risk issue to deal with. If you're not managing those issues, you're going to have a hard time attracting the employees that you need and retaining them. If you're seen as a pariah in the business community, other businesses won't want to work with you. So it's not, no investor is saying, you know, we only want to work with businesses who are socially responsible because we want to go out and save the world. There's some capital. I mean, there's actually a lot of capital. There's about $10 trillion right now of impact capital in North America alone, and that's growing. But that's only a small part of the capital that is influenced by a business's sustainability performance, that is influenced by a business's social performance. Because the rest of the market, funds, hedge funds, investors of all types, look at sustainability performance, they look at social performance, they look at your sustainability reports, they see whether you're GRI compatible, they look at all of this as part of a proxy in terms of your overall management capacity. So business is keenly interested. We could also look at the Equator Principles, where, you know, many of the world's leading international financial institutions and banks are requiring projects and businesses that they invest in to meet the IFC, the International Financial Community's performance standards on social and environment. Why? Because it makes business sense, because projects and businesses that operate with that level of social and environmental engagement and performance are going to perform better over time. That's proven by study after study all over. If you want to look at long-term successful business performance, you need to take into account social and environmental performance. Not ahead of other areas of business performance, but as part of it. The final point on this is that just performing well is key, but communicating it is also key, because you need to recognize that your constituents, your stakeholders, your investors, your employees, your customers, your suppliers are not going to automatically know how well you're doing. So being able to communicate that with them effectively is part of getting more value from what you're already doing.